All right, in this lesson, we're going to give you an introduction to the different types of inventory systems that we have available. Now, one is a more simpler system, and the other one's a little bit more complex. And the key with this inventory system is helping you understand that there are two ways that we can keep track of our inventory and our cost of goods sold number. So we don't have to do it the same way, depending on what we're trying to accomplish at the end of the day. So that's what we're trying to do here. How do we keep track of our inventory and cost of goods sold? Well, we've got two different ways of doing that. Both of them should give you to the similar answer. It's just the timing of all those entries that might happen. So let's take a look at the two types of inventory system. The first one is the easiest one, and that is the periodic inventory system. Now, how do I remember the periodic inventory system? It has the word periodic in it, meaning that it is completed every so often. So we update inventory and cost of goods sold every so often because it's periodic. The other inventory system that we have is the perpetual inventory system. Perpetual typically means forever, but what we would think about when we think about perpetual is that inventory and cost of goods sold is updated all the time, indefinitely, perpetually. It is being updated as a transaction happens. So if you notice here, our two types of inventory system is that we have one called periodic that is updated every so often, and then we have perpetual, which is updated every single time, and specifically every time we have a sale. Now, let's talk about each one's a little bit deeper. Let's start with the easier one, which is the periodic inventory system. This relies on updating inventory every so often, typically at the end of an accounting period. Now, some of the characteristics of periodic inventory system include it's typically used by small businesses because it's easier. You're only having to do this once a year instead of every time you make a sale. And for a small business, they may not need to do it every single time just because it's a little bit laborious from a work standpoint to keep their records up to date to the second. Another characteristic of periodic inventory system is it keeps track of purchases in what we call the purchases account rather than the inventory account. So when they buy inventory, they typically debit purchases instead of inventory. That is one of the differences you're going to see here when we talk about periodic. But for now, just think about the inventory account. The third characteristic here is there is no way to know how much inventory is on hand at any given time from a financial accounting standpoint. Now, this doesn't mean that you can't go out and start counting it, but if you have a lot of inventory, looking at your books won't tell you how much inventory you have at any given time because we're only updating our books every so often. Our books are going to be incorrect when it comes to inventory and cost of goods sold. Now, we must use the inventory equation at the end of the period to calculate cost of goods sold. So if you remember in the last lesson, I showed you the inventory kind of calculation. We're going to need to use that to calculate cost of goods sold because we're not keeping track of our cost of goods sold as people buy our stuff. All we're keeping track of is our purchases as well as our beginning inventory. And at the very end of the day, looking at how much inventory we still have left to back into the cost of goods sold. So we must use the equation that we learned in the last lesson to be able to calculate cost of goods sold. Now, flipping the coin here to the perpetual inventory system. The perpetual inventory system relies on updating the inventory account continuously, and typically we update it after every sale, after every return, after every purchase of inventory. So it's always up to date. This typically requires something called a POS system or a point of sale system to track all the inventory movement. So this is why if you go into a large grocery store, they have an electronic computer scanning all of your products, because by scanning all your products, that basically updates the inventory in their books in real time. If you go to a small mom and pop, they might be just using a cash register that just has a tape, but there's no computer system around it. That's because they're not updating their inventory in real time, so they don't need a high-end computer system. So if you're wondering, how does it all work? That POS system, that computer system that they scan the barcode is what helps all of this make sense from a perpetual inventory system standpoint. Now, some characteristics of perpetual inventory system. The first one here is typically used by medium to big businesses. And the reason why is because these systems cost a lot of money. Now, we've gotten better at reducing that cost, but there is still a cost of trying to keep your books up to date in real time, especially your inventory and cost of goods numbers, because you're trying to figure out how many units you still have left in inventory at any given time based on what your inventory system says. Second thing here, keeps track of inventory in the inventory account, including purchases. So typically we'll debit inventory instead of purchases and then credit however we paid. So we use inventory rather than a purchase account. A well-designed inventory system will allow a company to know how much inventory they have at any given time. So the key word here is a designed inventory system. If you just have an inventory system, it's just not going to work. You're going to have a good one that actually knows what it's doing. And then the fourth characteristic here, typically do not need to use the inventory equation to calculate inventory or cost of goods sold because your computer system is already tracking all of that in real time. However, we will use it for something called shrink. So we could use it to calculate shrink, which I'll explain in another lesson. So what do companies use? Well, most companies will use the perpetual inventory system because it provides better data for their managers as well as for their customers. So for instance, if you go to, and don't quote me on this because sometimes it varies, but if you go to like homedepot.com or target.com and you put in the actual store that you want to shop in, it usually will tell you how many units are still on the floor. I think that's Home Depot. Or if it's still available, I think that's Target, in their stores. And that's because they have a system in place that keeps tracks of all of their inventory. So they're able to do that because they have a good inventory system. So as soon as someone scans an item for being sold, you're going to see it on the website, click down one unit because it's no longer there. So if you see Home Depot, it might say there's 12 left. As soon as they scan one product out, it's going to say 11 and then 10 and then 9. And then if another truck brings in another 10 more, it's going to go from 9 to 19 and then kind of work its way down again. So the beauty of that is because we have a good, well-maintained accounting system, and that provides us better data because it provides better data for you. But then if you're also in the store, an employee can just look it up on their handheld device or a computer system without actually having to try to find in the warehouse where it might be or if it's back there in the storage area. So what do companies use? Perpetual inventory system. Now, again, small businesses will not use it because there is a cost of having a system like that, but the cost has come down and some smaller businesses are able to do that. But it sometimes is laborious. So that's why big businesses use it all the time because they have the manpower to be able to operate the system effectively. So that is a look at the types of inventory systems. We're looking at perpetual and periodic. Perpetual is what used by big companies. Periodic is what used by small companies. So hope that makes sense a little bit, and we will see you in the next lesson. Hey guys, if you like this video, make sure you press the like button below. And if you're looking for worksheets that go along with all of these lessons, head over to my website at patrickleemsa.com or clicking the link in the far right. And I've got your next lesson right over here. So just click that link and it'll take you to that video. So until then, we'll see you in the next lesson.